This is Oracle's Trading, your last stop in trading education. We are going to be continuing our training on how to trade profitably. And this particular time, we'll be going further into definition of terms. There are terms in the Forex market you need to understand, and you need to know their implications and how they matter in the business. Knowing them will help you to effectively engage them in one way or the other positively. But if you don't know how they operate, a little mistakes there and here may become very serious mistakes. So we want to talk more on currency codes now. When you have like GBP USD equal to 1.8100, this is simply what is called currency codes, and it is usually to 4 decimal places for the major currencies or the major pairs, for the major pairs, but also not only for the major pairs. When we talk about currency like JPY, it is usually to 2 decimal places. For instance, if you have a USD JPY equal to 130.65, that is 2 decimal places. Decimal places are counted after the point when you are moving from your left hand side to the right hand side of the code. So you begin to count after the decimal point. So for GBP USD, it is to 4 decimal places. For USD or for the JPY pairs, it is to 2 decimal places. But you can have platform that is giving you up to 5 decimal places. The 5th decimal figure, that's the 5th figure now after the point, is usually neglected. Just ignore it for the 4 decimal place pairs. And then for the 2 decimal place pairs, if you have up to 3 decimal places, just ignore the third one. That third one or the 5th one, the 5th figures are counters, so you don't have to bother much about them. So that is that for currency codes. But one more thing for people that are absolute beginners, you need to understand what is PEEP. Okay, we will also talk about that, but just a brief introduction here. You see, we have here GBP USD equal to 1.8100. So if the market moves up to 1.8110, that is 10 pips move in the up direction. And if we have the market move to 1.7990 from 1.8110, the market has moved 20 pips, taking 1.8110 as a reference point. So we are going to have time to talk more about pips, how to count your points. So, but for now, you can digest this. Then we talk about lot size. Please listen carefully here. The lot size had determined over the years to a great extent, whether traders were made or mad. Your lot size will determine whether you will still be in the market or not in times of turbulence. And statistic has it that about 70 to 75% of the time or more, the market is sleeping. So if when the market is sleeping, you are using very big lot size, then the person is likely to be taken out of the market completely. Lot size shows how much base currency will be traded in terms of units. The base currency is the first currency in the currency code. For instance, here the base currency is GBP USD, and then the code currency is USD, that's United States dollar. So these are theories that you need to know so that you can trade better. But knowing this, all these terms, is not going to guarantee your profitability without knowing the whole. So this is the part that you need to know, but it is knowing the whole that will make you and enable you to become successful. This is very necessary. You see, to be able to place one standard lot in the most of the currencies, let's just generalize it. To be able to place one standard lot, you need about 100,000 US dollar to place it, averagely, generally, like that. So just have that in mind, and then from there you can now walk down to your account size. You see, many traders don't understand lot sizing before they jump into the market. I didn't understand also when I started trading. I wanted to make so much money overnight, and you can tell the result. You can tell the result. It is an experience that is common among traders. So at the beginning, most traders don't understand what lot size is. We are going to take special time on how to choose your lot size. So when we enter the practical aspect, we are going to dedicate serious time to lot sizing. It is not usually taken care of. Generally, when in the education that is common out there, nobody is really telling anybody per se the number of lot size. You have places also number of lot size. Don't go beyond these. It is so general. What is out there is so general and not specific. But we'll be going into specific details. We'll be telling you how, if you can make just 1% of your account balance, or your equity, just 1% daily, where you will be in 1 year, in 5 years, in 10 years. But the forex trader will never see that as anything. He looks at the market and feels that he can be the richest in the world in no time if and if doesn't work. This market is practical, it is reality. So let us move forward. So we said that I have said that during our practical sessions, we're going to take you deeper into the lot size issue. We'll give you a formula for choosing the best or optimal lot size so that you trade without stress, because lot size can introduce stress into your system, not only into your trading, into your body. It can affect your body, not only your trading account. So when things are going well, you'll be happy. When things are going wrong, you will not be happy. That is not needed. So let us move to the next one. We'll talk about spread. We've talked about spread before, but just for a reminder, spread is the difference between bid and ask. In the practical session, you are going to see this. For instance, okay, let me show us something. Here on this USD CHF chart, you are seeing only one price here, but there is something. Okay, let me do something here. Let me go to the property and see. Okay, let me add period separator. Let me see, show ask price level. So by the time I show ask price now, you see what popped up here, this red line, and then the red line now comes here. You see, usually the ask line is not displayed on the chart if you are using MetaTrader 4, or sorry, MetaTrader 5. Also MetaTrader 4, it is like that. It is not displayed automatically. So you choose to display it. And at times you see that you are taken into the market when the price has not gotten to your entry or your exit. At times you are taken out of the market when price has not gotten to your exit, or you are taken into the market when the market has not gotten, when the price has not gotten to your entry. It is the effect of this ask line that is usually not shown. So the difference between the ask line and the bid, the ask price and the bid, is what is known as spread. It's as simple as that. And when you are choosing your broker, the spread is one of those things you should look out for. Does he have wide spread? Look for optimum spread. One pip difference in spread can be the difference between a losing trade and a winning trade. Yes, one pip difference in spread. So take your due diligence when you are selecting your broker. The bid is the price at which traders sell. The trader sells, but the broker buys. So that is just it. Is confusing. What is bid to the trader is ask to the seller, and what is asked to the trader is bid to the broker. So I think that is okay. We'll talk about leverage. Leverage is simply an advantage. It enables retail traders, especially, to be able to partake in the market. Retail traders can also partake in the market. Retail traders can also partake in the market because of leverage. And when we have leverage of 1 to 200, it means that your 1 naira or your $1 or your £1 or your 1 Japanese yen will be able to place a trade that is worth 200 times. So 1 to 200 will enable you that. 1 to 100, it means you'll be able to place a trade worth times 100 of your balance. But be careful with leverage. You need to be careful. For instance, if you have $1,000 and your leverage is 1 to 500, that means that you can place a trade that is worth $500,000. In quote, $500,000. So you may feel that, okay, I can place a standard trade since one lot size costs $100,000. So since now I have the account to be able to place a trade worth $500,000, $400,000, $300,000. Let me go ahead and trade one standard lot with a $1,000 account. So yes, you'll be able to place a standard trade. But when you are losing, remember that if you are losing, you are also losing big. For instance, if you are losing, if you just lose about 100 pips, you are out of the market. Because losing 100 pips trading the majors, that will be equivalent to about $1,000. You are gone. So be careful when using leverage. When we come to the practical session, we are going to be telling you deeper things about leverage, about about pips and so many things. Stop loss, take profit, where to take your profit, where to actually enter the market, the exact price to enter the market. We are going to be letting you know. Your profits and your losses are calculated automatically by the trading platform you are using. If you are using MetaTrader 4 or MetaTrader 5, you don't need to bother about calculating those things yourself. The platform is calculating it automatically for you. Then the Forex order types. We have different types of orders. There are so many, but what you will need in our trading mode or in the trading mode we'll be presenting to you, it's not going to be much. We are going to, one of those things you'll be doing is one of those Forex order types you'll be using is a market order. So in market order, you buy directly or you sell directly. It is instant execution. It is there. When we get to the practical sessions, you are going to know it is instant execution. So in that, if you want to sell, this is the button you use to sell. It says sell by market, buy by market. So if you want to sell directly, you just click and then you just sell. Click here directly, you are into the market. Or if you want to buy, you just click this and you are into the market directly. So another order we'll be using is limit order. This is used when the trader wants to enter into the market at a better price, a better price than the current price of the market. We'll be using buy limit order, we'll be using sell limit order. When we get there, we are going to explain deeper. So like buy limit, if you want to sell, you have analyzed the market and you see that the market is downtrend, but you want to sell at a better price. That means you need to sell at a higher price than the current price. So then you use buy limit. So buy limit is used to at sell a currency pair at a price higher than the current price. While sell limit, sorry, buy limit is used to buy a currency pair at a price lower than the current market price. Is that clear? And sell limit is used to sell a currency pair at a price higher than the current market price. That's that. Then we have the stop order. This type of order is used when the trader wants to buy at a higher price or sell at a lower price. So when you have done your analysis and you see that, okay, if the market ever gets to this high price, that is, if it ever gets to this price higher than the current market price, buy for me. You set it. So you use buy stop in that case. And then sell stop if you want to sell at a price lower than the current market price. Then we will talk about take profit order. How do you take your profit? We'll talk about stop loss. We'll talk about how to modify your trades. We'll talk about how to close your trade. Maybe your trade has not gotten to the expected target and you have a change of mind. How do you do that? You close it. How do you close it? We'll be taking you through that when we enter the practical session. This is still theory. And then we'll talk about demo. The forex market. The forex market has a very wonderful provision. There is opportunity for traders to practice and see if the business is for them. So you have enough time to decide by applying for a demo account. Most of the brokers have it. So you practice first, practice the technique you are given, and be comfortable with it. It is necessary. You need to decide whether the business is for you or not. You need to decide whether the techniques are good enough for you or not, whether the techniques can make you money or not. But many traders, because of what they want, jump into the market without taking time to ascertain the training they have had through demo, through practicing before they enter into the market. Take enough time to practice and master the market, master the trading platform, know how to navigate around it quickly. It is necessary. You see, at the end of the day, what you'll be making is worth the trouble. It is worth the investment. It is worth the commitment. So take your due diligence. Make your due diligence to put things in order before you launch into the market. Practice and practice and practice before you enter real scenario, before you put in your real money. There is more than enough room for you to practice with virtual money. Somebody may say that virtual trading is not the same as real trading. They are not the same, honestly. But the truth remains that if you cannot succeed using a demo account, virtual money, then forget about success using real money. Please, is that clear? Look at the market. You need to take your time, understand what you have been taught and the theory. Use virtual money. And there will come a time when you will need to use real money to demo trade. Like I'm using it, real money to demo trade. That is like unacceptable. I'm done with demo trading now. I want to go live. And you are telling me over the years you will understand what we are saying. When you use real money, don't use much of real money. Use small money. In your mind, you are trading live, but in your mind, you are learning. It doesn't mean that you are going to blast the money. But small money introduces you into the reality of the market. I will advise that you don't start with big money at once. When you are done with demo trading with virtual money, look for tangible real money and put it in that. Take your time to enforce your discipline. From there, you will become successful if you follow our training strictly. If you follow our re-education strictly, you are going to be successful. You don't have to blast your accounts. You don't have to. But the real money, the little money that you bring in at first is going to help in terms of your discipline and commitment to the business. That is all for now. Closing promise. If you are serious about becoming the trader you've always wanted to be, subscribe now to Oracle's channel. Oracle's trading isn't about hype, it's about truth, discipline, and results. Welcome home, fellow trader.